Okay, now okay. Really? Okay, good afternoon. Shall we start? Good afternoon.
Good afternoon, sir.
I shall start. Okay, so we'll continue with the recovery management program. Last two sessions we discussed the importance of recovery and how to choose voluntary supervision follow-up, and finally finished with the causes for failure. That is why the customers defaulting and what are the problems with the customers. Finally, identified the warning symptoms and what are the options now available for us to go for recovery. So we had going to discuss about the 7 options available for our recovery management. So first one, the best discussing going to be rehabilitation of the defaulted facilities. What is rehabilitation? How to do rehabilitation? What what is the basics of doing rehabilitation? Okay, right. Uh, uh, Debt has fixed dates for interest to be paid and principal amount to be paid. Or inadequate cash flow, the debts may not be able to pay back. So this is one of the reasons we discussed last sessions. Customer may failure. The main reason is inadequate cash flow. Cash flow will be the payment source. According to the rehabilitation, the Indian Sick Industry Companies Act in India, how they define as a sick industry. And industry sickness means company has accumulated losses are equal or exceeding its capital or entire net worth, then it is considered as a sick industry according to the Industry Act. Right? So what is sick industry? How we identify sick industry? One of the researchers at least uses what he calls as VNC framework and classify to criticize the loans. V stand for company viability, C stand for collateral asset values. Two factors. When the company's business is viable, on the other hand, whether collateral is available. Based on that, he have developed places loans on the 4 quadrants based on whatever the company's viability and collateral asset values are positive or negative. Based on that, this is how he have been developed. Right, the VNC framework. Company viability is positive. That is, collateral assets are positive, is available. Company viability positive, that is one quadrant. That is highest, best we can do, go for rehabilitation easily. The company viable and collateral assets position available. On the other hand, company viable, negative. Collateral assets are positive. The company viability is not there because company cannot continue any further, but assets are available. Then what is the position for us to do? Third quadrant says company viability is positive, collateral is not available. Assets are negative. Then what action we can take? Then fourth one is both negative. Company's viability also, that means business cannot continue any further. There's no collateral or assets also available or not realizable. Based on these 4 quadrants, how he analyzed, let's see. Negative viability and negative collateral asset values often indicate a distress sale or liquidation, the foreclosure or wind-up scenario. That means if the viability is negative, that is negative when the negative collateral, viability was a negative, that means business cannot be continued because there's no market to go ahead and the collaterals are not available. The option available is foreclosure or the liquidation. Whatever go for legal action basically. Negative viability and positive collateral value generally suggest that an ordinary sale or liquidation is likely. That means if the viability is negative but the collateral is available, we may go for liquidation, that is collateral to be disposed and recovered. The positive viability and negative collateral asset values indicate the potential for turnaround, workout or restructuring. Where viability is very positive, that is business can be continued as a market, we can go ahead. Collateral may not be available. So we can go for a business turnaround, workout or restructuring, workout. These are the structures available. In positive viability and positive collateral asset value such as like false alarm, the firm is fundamentally healthy. Okay, viable is viable. The project is company is viable. Based on that, I had developed three scenarios to find out whether viable or not. So based on that, if the market is viable, that is the market companies or market is viable, and the customer also viable. Viable means customer also agreeable for a solution or settlement. And the collateral is available. Then we can continue with that business because the market is there. Customer can go ahead with the business. We have to give support. That's what we needed. Customers agreeable. So both are positive side. Both are positive. Viability is positive. The collateral viability is there, then we can continue. So best option available is go for rehabilitation. Best option, go for rehabilitation. So let's see what's rehabilitation. Next slide. Then next option is compromise settlement. Market is completely paralyzed. Market is no more there. That product does not have a market. Cannot sell. In other words, his product is not saleable. There's no market to sell. There's no buyers. Market is completely paralyzed. But the customer is viable. Customer agreeable will come for a settlement, and the collateral is viable. Our next option is best option is called compromise settlement. Today we are going to discuss these two rehabilitation and compromise settlement. We'll discuss. And what are these two recovery methods? Now, rehabilitation and compromise settlement, we are going along with the customer because customer is viable. Customer is positive. Viable means customer is positive. He come forward. So we can do some sort of arrangement to recover facility going along with the customer. So it is with the customer. Next scenario is liquidating securities. Market is viable. Yes, sell the securities, collaterals. Market should be positive. Market viable. That means there should be a market to sell. Anybody to come and purchase the assets, there should be a market. Customer is not viable. Customer is not agreeable for any solution, but the collateral is available. In that scenario, we have no other option. Exit strategy has to be adopted. Exit means try to get rid of the customer. That is the first option available on the exit strategies are liquidating securities. Liquidating the securities. If the market is not viable, customers will not come agreeable for anything. Collateral also not available, or collateral is available, not enforceable. Collateral is available, but not legally enforceable due to weakness in our documentation. Customers will not come forward for any negotiation. Then there's no market also to go ahead. Next option available is go for litigation. Take a legal action. So it's the next option is legal option. So next two options are exit strategies. There are certain instances market is not viable temporarily. The compromise settlement, the market is completely paralyzed. Completely is no more existent, or that product cannot be sold anymore. There's no buyers for that. But when there's a temporary market failure due to maybe environmental factors, maybe external factors, the market may collapse temporarily. But customer viable, collateral viable. Best option is to wait and see, do nothing. We have to wait till the markets come back to normal situation. Thereafter, we can go for recovery program. That's called do nothing. So this is short term, what you call time till the market is coming to normal situation. We hold the customer and wait till the market till recoverable. Then we can go ahead with the recovery program. Final option is if then nothing is can be done, market is not viable, customer not viable, collateral is not viable, not positive, we have to book out. That means we can't keep that facility anymore in our books. Earlier we call this as write-offs, capital write-offs. Now we have changed the word, not capital write-off, it is the book out. Capital write-off is the terminology is not correct. Right, let's start with the rehabilitation. What is this rehabilitation? Your job as a lender is to get the truth. Sometimes firm is not viable, but we want to work with the customer and believe what he says. But if the firm is negative viability and we give management too much time to turn it around, negative cash flow eats up the balance sheet, eats up the value, and eats up the collateral coverage. This leaves our lender exposed to possible loan loss. This is where most of the bankers, we fail in. We trust the customer. Actual position of the customers have not been evaluated by us. Some earlier sessions, we discussed this, going into detail. Identify the problem of the customer is very important. Identify the problem of the customer. For that, we need a lot of information we discussed in the last session. A lot of information we needed, internal and external information. But if most of the time our informations are not adequate or sufficient, or sometimes we may go wrong, then finally we end up with whatever our effort turn around. That means we give management too much time to turn it around. Negative cash flow will each of the balance sheet. That means balance sheet getting deteriorated. Assets quality get deteriorated further, and the value goes up. Collateral coverage also may not be sufficient. So therefore, workout process suggests by the LEs suggest 5 steps that lenders should take when confronting with a problem loan. First one is know the facts about the borrower and also the bank's financial and legal position in relation to the loan. This is number one, how to start with. Facts about the borrower. That's what we discussed last sessions. Information, collecting information, internal, external. Analysis is very important. Supervision, follow-up, monitoring. Start with that. Find out what has gone wrong, where was the problem. And on the other side, bank's financial and legal position, whether we can sustain the position. Any effort to go ahead. What is the legal position? Relation to particular with the customer particular loan. Legal background. On the first session, my first session in the slide, can you remember I gave? Recovery management is enforcing securities. Enforcing securities mean whatever securities charged to the bank, we put to liquidate, for which the legal position should be perfectly should help us. This is a problem we are having now. So let's see first see the customer's background and our position with the legal act, enforcing the collateral. Second one is identify the companies and the bank's problems with the loan. Identify the problem with the bank side as well as customer side. Once you know the facts, you need to understand what's broken. That's the problem. Are you happy with your loan? You need to look pricing terms, collateral reporting, financial reporting. Obviously, loan to value is critical. Loan to value means the collateral value and the loan are critical. Right? So we'll understand the situation. Third one is determine possible courses of action. The VNC framework can help you decide if a turnaround is possible or whether the firm should be sold or wound up. What action you should take. That the VNC model we discussed a little while ago will help us to identify the problem. Create a proactive, objective-based action plan. Fourth one is that. Create a proactive, objective-based action plan. A good action plan must address the loan to value, reduce your risk, and hopefully stabilize the borrower. Stabilize the borrower. It must be specific in terms of time and steps to be taken. So our proactive based action plan in specific terms, specific time, and what step to be taken during that time. Establish a program to monitor the firm. Whatever action, and do the monitoring. That is very important. Louis identified several general principles that guided him throughout his career. It includes the following. So what is he have this writer who had given this article? He had given 5 reasons. Make sure the documentation is accurate and complete. Collateral security documentation is accurate and complete. So a very serious effect when we talk about. Because most of us bankers still our documentation part is we are not paying much of a seriousness in the documentation. That is a place where we fail in our recovery. We have find difficulties in recovery because of the weaknesses in documentation. Communicate clearly and effectively with your customer. Communicate clearly and effectively. Spot to the point. Evaluate company's management to determine if needs help or should be replaced. If the business can be continued, but the weaknesses in the management, we may able to take over the we may able to or we may have to take over the management and run the business to recover our loan. This is part of Parrot, discussed later. Next session will be Parrot. Part of Parrot. We'll take over the management of the business. We put and we can continue the business. Remember that the bank controls the loans but doesn't control the borrower. is an important factor. We cannot control the person. We try to control our loan. Get value in return for loan waivers or amendments. This is the other factor we are going to discuss about the loan waivers, that means interest waivers, loan concessions. When we talk about, there should be value in return, what the return we are getting. That has to be worked out. Avoid putting new money into lender with a trouble loan. Right? If the customer's problem is identified, giving further facilities to that customer will not going to survive, then we should not go ahead with that customer. Most of the customers, when we come to trouble level, they come and ask funds from the bank. But we have to evaluate and see whether can the customer rehabilitate by new loans and recover the old loans also. Here again, we have some problems with the internal factors, internal management policies, bank policies, that if a customer defaulted, he will not be entertained for a new facility. Right? So we have to develop, analyze and see whether it is viable to give a new facility. Work closely with the third parties, other lenders, guarantors, and equity holders, stakeholders, right? To recover our position. Okay. Now, rehabilitation is what is rehabilitation? Is to revive a sick industry or a project or a business to operate viably. Put customer back to business. That's called rehabilitation. Rehabilitation is put the customer back to business. So we have three options available. One is rescheduling, restructuring, and business turnarounds. Three options available to do rehabilitation. These are very simple, very common. Restructuring, rescheduling, business turnarounds are very common. We had to apply certain principles and certain techniques, especially business. When it comes to business turnaround, it has to be done a very scientific method. Okay. So let's see what is this rescheduling, restructuring, and business turnaround. Rescheduling of advances means granting more time period to pay back the facility, matching with the cash flow for the income, and with the same terms and conditions already agreed upon. Right? What is rescheduling mean? Extending the period to the customer to pay the facility. Extending the period. That's called rescheduling. Right? Granting more time period to pay back the facility, matching with the cash flow. Why? Very simple. Only without changing the terms and conditions already agreed upon. Only the extending the period, by extending the period, loan installment can be reduced where the customers match with the customer's cash flow or the income, and he may be able to pay. So the problem here is when you can see that rescheduling is needed where we are not structure a facility in a proper way. So if you further analyze this one, this is actually a bank problem, not a customer's problem. Customer problem may be, but most of the time it's a bank problem. Right? We have to understand that. What is rescheduling? We'll discuss it in detail. When a borrower fails to repay the loan installment accordingly, the terms and conditions they agreed upon, they can request for reschedule or the loan, or the lender can approach the borrower for repayment. Rescheduling includes the revision of interest rate and loan tenure, extension of tenure period. Suppose, right, now, for example, customer can ask for a reschedulement. That means existing customer had paid certain loan installment for certain period, and then he find that if he cannot pay, his income is not sufficient to pay. If he comes to negotiate with the bank that he is not unable to pay the loan installment, best option is for us to reschedule the facility, grant a new facility for the existing value, and give a period extended. That's one option. Second option, without changing anything, extend the period only and reduce loan installment to match with his cash. If the customer can pay back. It's called rescheduling. Suppose an organization is difficult or can't repay the loan installment. If the lender believes that the borrower has repayment ability, at that time lender can revise interest rate, extension of loan and lowering the equated monthly installment, EMI. EMI means equated monthly installment. That monthly installment can be reduced. Now, this resettlement also practically can be applied easily if we identify the customer's problem very carefully, correctly. Because sometimes customer defaulted due to certain management failures. Management failures, it can happen. There are three areas where we can identify the management weaknesses are coming up. Right? One is inventory management. Managing the inventory. That is, we can work out in the ratio analysis. Normally we do in the ratios, stock turnover period. With that, we can observe how the customer managing their stocks. Secondly, managing the receivables, that is debtors. How much of credit terms given, how long the credit is given, whether the customer can ability to absorb that period. Second one is that. Third one is expenditure management. If you look at the customer's profit and loss account, customers have a gross profit ratio is very high. Gross profit ratio is very high. But when it comes to net profit, it has been declining very badly. The cost incurred has been very large. We call this as a fixed cost. Variable cost can be earned profit, the fixed cost is very high. Managing this cost is important. So customer weak in managing the cost, it will increase. Then fourth one is managing the borrowings. Managing the borrowings. Because borrowings, whenever a customer borrows loans, his profitability will be deteriorated. When the profit deteriorated, his cash flow is deteriorated, he is unable to pay back. So therefore, there are 4 areas very important we have to analyze. So when you go for rescheduling program, these 4 areas has to be strengthened. Customer weaknesses. Then we can recover, put our plan for recovery. Okay, so recovery mean, in other words, rescheduling mean extending the period. This is not very different from rescheduling, but that's called rescheduling. Why should we go for rescheduling? Number of cases. Basically, at the time of granting the facility, what there are 2 basic factors has to be taken into consideration. That's called fundamentals. One is need-based finance. I don't know whether I have discussed this in earlier. Need-based finance. Other one is cash flow-based recovery. Identify the cash flow for recovery. Yeah. Therefore, basically, the problems with reschedule comes when the loan installment, when the structuring facility, loan structure, the loan installment has to be taken into consideration whether the customer has sufficient cash flow to pay. Most of the instances we have made mistake, we are taking the profit, DSCR, taking consideration the profit, the service cover ratio calculated by the profits. But we are not realized that profit has to convert into cash to pay. Therefore, the cash flow is the repayment source. Profit will not pay the loan, only the cash flow will pay the loan. For example, we take the profit and loss account of the customer earned a profit, good profit. We work out DSR 2 times or 3 times, it's there, we are happy. But unfortunately, it takes time to realize. So the sales are on credit. Therefore, it is not cash. There's a time period. So that's what I told. Look at that carefully when you give for rescheduling. Best thing is reschedulement. Best option is go for reschedulement. If the customer's repayment ability is there, match the cash flow, how much is coming, work for cash flow projections, and do the reschedule accordingly. But if we need little complex situations, complication of complex situation, not the rescheduling is not enough. Rescheduling is not enough, it's not sufficient. We have to go further changes. This is called restructuring. Restructuring means completely changing the structure of the facility. This is very different from rescheduling, but a complete new process which includes all the aspects of rescheduling. Lowering repayment amount, payment, and enhancement in loan amount. Also changing the terms and conditions are included in the restructuring program. We can say restructure is completely a new loan as it requires all the documents to be modified if it's needed. New loan has to be developed. Will be considered for only those businesses which have growth and can repay the loan. Restructuring, again, market has to be viable. Only those businesses which have growth and can repay the loan. The borrower has to provide sufficient documents in supporting his financial ability to repay the loan, then only considered for restructuring. Well, when a borrower faces financial stress and cannot repay loans, it asks for relaxation of original terms and conditions. Banks then ease the certain terms like reduction of interest rate, moratorium on interest repayment, so on. In banking parlance, it is called restructuring. Standard assets mean performing assets. Okay. So moratorium is part of restructuring. Restructuring aims at taking care of stressful loan accounts for genuine borrowers. Genuine borrowers. Okay. The restructured loan takes into consideration the repayment using a loan with operational difficulties for the borrower, which is causing the account to stay overdue. By the operational difficulties, try to rectify the operational difficulties. But rather actual problems. An overdue loan will impact on credit score adversely as the amount stay overdue on a continuous basis. Customer's credit rating may deteriorate if it's becoming overdue. As such, restructuring a bank loan will generally help eliminate such overdue amounts and hence impact on the credit score favorably. Can convert. Okay. Right, let's come to the restructuring we call as debt restructuring. It's a process that allows a private or public company or sovereign entity facing cash flow problems and financial distresses to reduce and renegotiate its delinquent debts to improve or restore liquidity so that it can continue its operations. මේ වචන කියනකොට ඔයාලට මතක් වෙන්නේ නැති. අපේ ශ්‍රී ලංකා situation එක. We need this restructuring. Not only the business, even the sovereigns. Sovereign means countries. Process that allow private business, a public company, or a sovereign in a company. We are facing cash flow problems. We are having today cash flow problem. Our cash inflows are foreign exchange. We have problem. And financial distress. Due to that, we have faced financial distresses. And to reduce and renegotiate delinquent debts to restore liquidity so that it can continue its operations. So debt restructuring is one of the professional approach in recovery. The borrower can offer to just restructure the loan repayment schedule to match the operational cash flow. Right? There might be a situation where when the business goes through long operating cycles and the cash flows may be skewed to some specific month instead of being spread evenly over a year. So cycles we discussed in the last session, the cycles that to be taken into consideration. When this operating cycle is expanding, the cash flow is getting expanded, facing difficulties. Why the operating cycles are expanding? Right? We have not done any this working capital management in this class. I have not done that. Operating cycle means how long it will take from the purchase of raw materials to sales and cash come back. That's called operating cycle. How long it will take? Normally we calculate operating cycle by number of days, by amount also. Number of days means debtors, first start with the inventory days, right? Inventory resident period, number of days, plus debtors collection period, minus creditors payment period. You get a cash cycle. So if the cash cycle is expanding, that means that we discussed earlier, I gave you, is a management weakness. It has to be managed properly. If they are managed properly, cycle will come down. The operating cycle means for a year, how many times the cycle operates? Cash cycle, how many times it operates? If it's shorter the time, better, because the funds are generated very quickly, cash coming up quickly. But if number of days are increasing, then time for getting back is getting delayed. Therefore, liquidity crisis or situation arises, customer may go for default. Take an example. That business differs, right? Now, operating cycle, you say 10 times. Operating cycle, divide number 365 days divided by operating cycle, we get how many times? Now, for example, if you say cycle is about 36 days. So 36 days means That operating cycle operates for a year 10 times. That means business can generate profits 10 times for a year. It's a good situation. If the operating cycle expands 45 days, then what will happen? Profit earning is come to 8 times. If it's other way, it's about 20 days, then it will further increase the operating cycle time. It will generate profits. So this is what we have to see, that the customer can turn around this business to restructure, increase the cash cycle, increase the number of days, reduce the number of days and increase in the turnover, right? Cash cycle turnover. Okay, this is what we expected to do when we come for restructuring. Similarly, cash inflows may be lower in the early years, but higher during the later years of project. When the project will work out for the project financing, cash flow projection is very, very important. This is not even throughout the year. No business having the say what you call cash inflows or sales are even equal throughout the year. It is fluctuates. So we have to identify the mean where we to make the recovery installment. Right? As such, rescheduling the loan repayment can help tide over such genuine operational issues. Extending the period will help as per rescheduling. What are the methods available for restructuring? Waiver of part of interest, concession on payment, converting the unserviced portion of the interest into term loans, replacement of recovery schedules, reduction in margins, reassessment of credit facilities. Let's go one by one. What are the options available? Restructuring is completely change the structure of the facility. Yes, we just start with this reassessment of credit facilities. Reassessment of credit facilities. If the customer's problem is due to insufficient capital, customer's problems by failure due to reason is insufficient capital, then capital has to be infused to the business. Right? Most of the businesses fails because the lack of working capital. Lack of working capital. So working capital I just mentioned you can be affected due to the operational cycle. Deterioration of the operational cycle. The management weakness. If it can be rectified, we may be able to identify to give further credit facility for the customer. If the customer ready to restructure his particular the working capital cycle or the cash cycle. If not, the customer has to infuse his own capital. If he has no capital, he may not be going to default. He may look after that. But unfortunately, it comes to the bank. So we have reassess the credit need of the customer. What are the credit needs of the customer and try to invest our loan, extend facilities. But this is not easy because our banking policies may have certain restrictions. One of the restrictions are in the practice If a customer is defaulted, the delegated authority of the manager to take give any further facility to that customer is withdrawn or delivered, sorry. So we had to get the approval of the higher management. So convincing the management that customer has defaulted due to some reason, genuine reason, is not that easy. Okay, that is the first thing. Again, reassessment of the credit facilities and try to infuse new capital by way of the customer's equity or bank loan. That's the first option available, first method or first option for structuring facilities. Second is concession on payment, that is rescheduling. We already discussed that. Payment installment can be reduced by extending the period. Okay. Then comes to replacement of recovery schedule. Again, recovery schedule. It can, one of the options available here is to plan out your recovery according to the cash flow of the customer. That is not the same equal amount to be recovered. Cash flow is not going to fluctuate. Your recovery has to fluctuate accordingly. Right? So that's the other option available for restructuring. We can reduce the NPA. Then comes to unserviced portions of the interest. What are we going to do? There are three options available for that. That means when the customer defaulted, the interest is got accumulated. Interest is got accumulated. How to recover the interest? We have three options. To recover the interest, we have three options. The first option is capitalizing the unserviced or accrued interest. The customer, now when the interest is accumulated, his repayment ability is getting weakened. He is not be able to repay the facility because we are trying to, we are forcing to pay the interest first. He is going to do, I told you earlier, my first session, what is the how to recover when the customer default. It is in capital plus interest in a proportionate basis. So therefore, interest component recovery is important for us, but it has to be considered depending on the customer's cash flow. First option is we can convert, put the interest can be capitalized, that is add to the capital and ask the customer and arrange loan installment, right, including the what you call interest also added to the capital and rework how to interest loan installment accordingly. But customer may not like to that because he had to pay interest over interest. When you add to capital, you have to pay interest on that also. So he may not like for that. But we may be able to convince him for a small amount or a small amount. Maybe we can convince him for a large amount. Second option is for the recovery of interest. Second option is granting an interest-free loan. That's the second option, best option. The interest component is taken out and do a credit, convert into a loan, convert the unserviced portion into a term loan. Right? Then customer will arrange to repay the loan, which is called interest-free loan or term loan. The term loan has to be paid in equal installment within 6 months or 1 year's time. During that period, we may not able to recover the customer's existing facility. Only interest can be serviced for the existing facility, and the interest can be recovered within shorter period time. That's the second option available to make recovery. Third option is the first one, we say waiver of part of the interest. All the customers defaulters, they will ask this facility. Loan එක ගෙවන්න අමාරුයි. ගෙවන්න interest එක කපලා දාන්න. To waive off the interest. Completely or part of the interest. This option we take will take into consideration there are a number of factors. We have to think about number of factors when we are offering an interest waiver to any customer defaulter. First one is to give this credit facility to the customer, we have borrowed from a depositor funds. Like given the customer depositors funds, no. For the depositors, we have already paid their interest. Depositors, we have already paid the interest. Therefore, we have already incurred a cost. We have already incurred a cost. When you're offering a waiver to the defaulter, we are going to forego that cost what you have paid to the depositors. We have to forego that cost. That means the interest paid to the depositors, we have to consider as a cost in our part. We are going to lose that. Okay. That therefore, are we going to absorb that cost? Second issue is here in offering an interest part of interest waiver. Our future income was already deteriorated. When we recover the interest, we invest back and earn something. Our opportunity cost. That's opportunity cost we are going to lose. That is further income going to be generated from investment of that interest part, we are going to lose. So we are losing that part also. Right? When you are offering an interest waiver, first one is we already incurred a cost. Secondly, we are going to lose our opportunity cost. Therefore, whenever we ask for a customer, ask for interest waiver, working out on their cash flow, the interest waiver will help him to stabilize his position and come back to normalcy. We may consider a waiver. It is not a part of to reduce the customer's liability, no. It has to be, the viability has to be there. Therefore, whenever a customer asking for a waiver of interest, at least we have to recover our cost of funds. At least we have to recover cost of funds already incurred for the facility. Therefore, we can recover part waiver and part recover. Right? Now, what is the policy of the bank when you're going for interest waivers? Or I'll discuss that in the last session. Interest waivers and capital write-offs. With that, I will discuss that part. What are the further action to be taken? So whenever it comes to interest waiver, we have to think about these facts. Whether it is the last option available, interest waiver should be given not as a benefit, but as a last resort where a customer cannot restore his business, unable to pay, only we give this concession, interest waiver. Then, if we are offering an interest waiver to the customer, when we offer an interest waiver to the customer, there's a condition. What is that condition? we offer the interest waiver as a terminal benefit. What do you mean by terminal benefit? That interest waiver will be offered after the complete settlement of the facility, not in advance. If you are given interest waiver in advance, he'll take the interest waiver and again he may default. And you may not be able to recover whatever it is. Therefore, this should be given interest waiver as a terminal benefit. That is, after the facility is paid in full, you give the interest waiver at the end of the loan repayment. This will be a terminal benefit. Okay, so that's the methods of doing restructuring, discussed one by one, how to do that. Then finally, reduction of margins, interest rates. With the sometimes customer may ask for a reduction of interest rate. When you go for reduction of interest rate for the customer, again, we have to consider about our cost of funds. What is our cost of funds? And what is our what do you call infection rate? The cost of funds and infection rate add together, that is a break-even margin for the bank. Anything above beyond that is our profits. Therefore, when you work out for interest reduction, base is our cost of funds. Sometimes large customers, they may ask for interest reduction, interest based on the market rate, that is AWPR rate, or what is the average rate in the market, based on that. Right? If your cost of fund is beyond the AWPR, AWLR, right, lending rate, average lending rate, then you may not be able to service that facility because end of the day, you end up with a loss. Therefore, always consider in asking for a reduction of interest rate, reduction of margin, whether it is within your cost of funds, can manage, and it is our break-even level. Is our break-even level. Going below that, that means we are losing the business. Okay, so these are methods of working restructuring. Then restructuring the management is another option, is in the restructuring. Debt restructuring in the restructuring the management. Okay, restructuring the management restructuring. That is the what are the weaknesses in the management? Identify, put management team into the management. That was a part of our recovery restructuring strategy. Specifically, when the bank is going to finance further facilities, we have option to appoint a director to the board of directors from the bank. In the corporate customers, corporate businesses, when you're going for lend, we always appoint directors to the board of directors. Or else, if you see the business is, the market is viable, business can be continued, due to the management decision-making weaknesses, it has been failed, we'll take over the management under parade. The parade you can do it. And appoint a management team to run the business. That's called restructuring the management. After recovery abolition, right, our loans, we can give back the business to the customer and do whatever you want. Then conversion of debt into equity. Right? This is also another option available. Long-term debts is available there, their customer is defaulted. Ask a customer issue shares, right? We'll take shares from the business or equity, convert the debt into equity, convert it to loans. So it is then the loan has not necessarily to be paid because it is a part of the capital. And whatever profits paid to dividends paid to the equity will be getting as a benefit. Right? This is another one way of doing restructuring. Conversion debt into equity. But normally bank loans, we are not going to convert this type of equity because banks will not do that. But if the customer having external debts in his balance sheet, we can ask the customer to issue shares to the debtor, the debtors, the liabilities, the creditors, and the loan. Thereafter, there won't be any loans there, and it will be part of the equity. So therefore, the loan installment repayment will be comes to standstill. No interest is paying, no loan installment. Then what will happen? Definitely, customers' cash flow position will be benefited. Additional finance may be sought for bringing about the change in the working of corporation. So this is what we started with, additional finance. If the capital is inadequate to run the business, if the market is viable, to pump more funds. That's also part of restructuring. Then interest waivers and interest deteriorating. Waiver of interest or overdue interest. I told you earlier what the position we had to take into consideration. Let's see. Borrower may not have paid a couple of installments due to genuine financial issues. He had defaulted. As a result of such default, banks generally charge some delayed overdue interest to compensate for the such delay. Such cost directly adds up to the project cost. So whenever customer defaulted due dates, bank will charge the penal interest. Interest rate will be charged for penal interest. Right? Some delayed overdue interest to compensate the delay. Further, bank policies are such that they generally adjust the overdue interest first at the time of regular installment. I told you in the first instance that when we try to recover the unpaid overdue interest, that is unpaid interest, accrued interest first, whenever we work out for installment payment. Our systems also have developed in such a way, whenever customer deposits funds, the interest component will be taken from there. So the loan repayment will going to be affected. Hence, the borrower enters to a vicious circle of some amount remaining overdue always and causing the overdue interest to continue increasing. Right? So whenever customer try to deposit, overdue interest will take over that deposit and it will be a vicious cycle, it will be increasing. In case the borrower makes regular payments subsequently, he can also approach the bank for waiver of overdue interest. Right? So again, if a customer is having repayment ability to repay, within that, if he asks for waiver of overdue interest, so we discussed earlier how to apply the interest waivers. Considering the better and regular repayment in history, banks are inclined to waive such amounts to encourage the borrower to stay regular in repayment. Depending on the customer's background, circumstances under which the customer has been defaulted, whether the bank can afford to give interest waivers, bank may consider that to encourage the customer to continue with his business. Right, guidelines on in loan is restructuring for individuals. Loan restructuring, so corporate, there are two types of restructuring we are going to talk about: individual restructuring and corporate restructuring. Loan restructuring means the facilities the bank or the financial institution provides to the borrowers due to their financial difficulties arising from their economic or legal reasons. These facilities shall not apply to other situations and in general shall include facilities on lending terms and conditions by amending one or some contract terms, including product change and interest capitalization, which mainly related to the term of maturity, principal, and interest rate. The structure, change of structures. We discuss another change of structure includes terms, repayment terms, conditions, right? Interest rate, recovery of interest, capitalization, or interest waiver, or giving a credit facility for recovery of interest. In the maturity, that is tenure of the loan extending, that also some of the methods available for restructuring. Collateral execution or other assets for the partial payment of loans. Collateral execution or other assets for the partial payment of loan. What is collateralizing the facility? What is the collateral facility? If there's a weak facilities are there are certain weak facilities go to the customer. Weak in kind of collateral level, it can be collateralized, strengthen the collateral. For example, temporary overdrafts, letter of guarantees, which can be converted, which can be covered by the total collaterals. For example, for property mortgage. So all these things can be absorbed into the collateral repayment coverage. Replacement of original borrower or involvement of an additional one. Now, if you see that original borrower is, for example, is sick or weak, he can ask his son or somebody in his family member to replace the borrower. Okay, that's also part of restructuring. Loan restructuring is a tool to work out the problems of the borrower that is facing financial difficulties without pursuing collateral execution or legal process. It's one of the best option without going for legal procedures, without recovery of my collateral execution, charging the collateral. It's one of the best options. Then next, it's called the individual restructuring. Next one, corporate restructuring. The process involving the change in the organization of the business. Redesigning one or more aspects implemented due to certain factors to be more profitable, survive economic conditions, address challenges, and increase shareholder value. So corporate restructuring, large corporates, we apply this principle. Need and objectives of corporate restructuring to improve competitive position of the business. Large corporates, we discussed later, that large corporate failure, it has a big impact on the economy. That's a big impact on the economy. Therefore, there are a number of stakeholders are depending on the large businesses, largely. Businesses, largely. Therefore, restructuring or putting back to business is very important. Rearrange activities to be more profitable. Right? So this includes certain products which may have to kill, that means to be suspension of manufacturing, which will eat resources, are not profitable. the non-profitable or marginal profitable items can be deleted. Rearrange activities in a more profitable manner. Cost reduction is one of the important factor. Cost reduction. Cost reduction is where the cost is not productive, right? It has to be reduced. But most what we say is cost, managing the cost. Managing the cost means you spend the money, get a return more than the what your amount spent. That's called cost management, cost benefit. So it has to be not reduction. Cost reduction is where unproductive expenditure can be cut down by that you can make the reduction. But on the other hand, there are certain costs has to be incurred. Then you get the best result on that incurring cost. That's called cost benefit or cost management. Utilization of strategic assets. There are assets are there, fixed assets and current assets. Make use that asset to earn for the business, utilize for the business. Normally, fixed assets will not generate any income. Fixed assets will not generate any income. But sometimes fixed assets may reduce the cost. Now, for example, if you have your in a strategic place, you have your own building, so you can get the benefit of the rental. Rental payments are very high sometimes. You can get a benefit. There are disadvantages on the side also. For example, for the tax. When the profits are increasing because of that, you have to pay taxes for that. Right? Eliminating the competitors. This is one of the strategies in the corporate environment. Eliminate the competitors. Cutthroat competition. We call cutthroat competition. Try to eliminate the competitors. By the way of eliminating, by way of price reduction, product deteriorating, adverse marketing or adverse comments, competitors can be eliminated. Okay, make another example about the competitive environment, how it is been affected. Sometimes like Sri Lanka also been පෞගිය කාලේ 2000 මේ වගේ දේවල් තිබුණා ලංකාවෙත් ටිකක්. Right? Now Coca-Cola was not introduced in Saudi Arabia because there are certain percentage of alcohol in that, 3% alcohol in that Coca-Cola. Therefore, Saudi not allowed Coca-Cola. Anyhow, Coca-Cola entered into the market in the changes take place, and what you call the prince have been negotiated, and Coca-Cola came into the markets. So the Coca-Cola is fastly moving product. Thereafter, the Pepsi also came into the market. Now the Pepsi and Coca-Cola competed each other to get the highest position in the Saudi market. Suddenly in the social media, a message was going, each liter of Coca-Cola sales $10 will be is going to the Israel use funds, because this Coca-Cola is coming from America, USA, where the owners are Jews. Therefore, the Facebook's information was spread that for each Coca-Cola liter, 10 cents goes to the Jews, Israel Jews funds. What happened? It's a Muslim country, no? In Coca-Cola, every liter, 10 cents and one, you don't pay it, they stop consuming Coca-Cola. Coca-Cola market collapse. Pepsi market kalana double strategy. They will. So use this type of using the social position to put down the businesses. Eliminate the competitors. Right. Then to have an access to research and development. When this restructuring, research and development is one of the key areas to see improvement of the business. Then focus on core strengths are competition and its restructuring needed. Revive and rehabilitate security. Revive and rehabilitate security. And constant supply of resources are some of the benefits, objectives. And finally, they get the tax benefits and improve the corporate performance. So corporate structuring will help to improve competitive position, more profitability, cost reduction or cost management, utilizing strategic assets profitably or productively, eliminate competitors, research and development, value development. Okay. Broad areas of restructuring are financial restructuring, operational restructuring, managerial restructuring, and asset restructuring. The 4 areas. Financial restructuring means reduction of capital, reorganizing the equity and debt base, buyback shares, that means reduce the capital. Right? One of the financial restructuring is to reduce the capital or reorganizing the debt and equity base, that is the solvency ratio. Bring the solvency ratio back to a acceptable level. Then buyback of shares. Buyback of shares means buying the shares from the market, buy the company itself, and reduce the capital. That is financial restructuring. Then operational restructuring includes product restructuring and market restructuring. Product restructuring means restructure the product according to the customer need. Identify the customer needs, develop a product to meet the customers for product restructuring. In the market restructuring, who are the buyers? The product has to be market oriented. Who are the buyers? What are the needs of the buyers? The segmenting of buyers market are part of operational restructuring. Managerial restructuring, improving the manpower. Okay. And asset restructuring includes new investments, technological changes, reduction of assets, sale and leaseback transactions. The asset restructuring needed, if you see asset turnover ratio is low, to improve asset turnover ratio and change asset position. Right? Sell the assets and go for leaseback transaction than buying assets. So it can reduce the asset levels of the balance sheet. So this is called asset restructuring procedures. Then what are the techniques available for restructuring of corporate? Expansion growth techniques, mergers, takeover and acquisition, strategic alliance, joint ventures. These are more or less same. A merger means similar companies can be merged together as restructuring. Then takeover acquisition of weak business by a strong business or buy out or sell. Then strategic alliances. We join with a strong group for strategic alliances. Then joint ventures. Going for a partnership, joint ventures, something like a partnership, joint ventures, and franchising. Right? So expansion business, franchising of branded products, licensing, and wholly owned subsidies by which corporate restructuring, part of the corporate restructuring can be included in the growth techniques. Then contraction or divestment techniques, demerger, spin-off, merger, demerger, spin-off, right? That also contraction. You could reduce the reducing techniques, expansion techniques, the growth I discussed earlier. Now these are reducing techniques, disinvestment, remove investment, slump sales, bulk sales, buyouts. Buyout means sell the businesses, leverage buyout or sell off. Those are contraction of techniques available for corporate restructuring. Other techniques are reverse merger, debt to equity swaps, buyback of shares, asset securitization. So this last one is very, we already discussed this one, asset securitization, using asset more productively, asset securitization. Okay, what are the principles of loan restructuring principle? One of the core loan restructuring principle is the voluntary act principle. We stipulate that the individuals have the right to enter into legal relations with any party they choose, and set those conditions they want. The first principle is the voluntary act. Thus, whereas each party, borrower and the creditor, might initiate loan restructure negotiation, none might enforce the other party to accept its conditions. So loans restructuring process actually become a win-win situation. It is applies the voluntary act principle. Because there's both parties should not force other party to enter into the restructuring program. They should voluntarily, independently act upon it. Then only the loan restructuring can be successful. Then first principle is restructuring as a compromise, not an obligation. Restructuring a borrower's obligation by the creditor shall not be considered as a right. It's not a right. On the contrary, it is a favor provided by the creditor. It is not a right of the borrower. Restructuring is not a right for the right of the borrower. Right? It is a favor given by the bank or the creditor. Restructure is a consent of the lender. Okay, Restructuring should start when the creditor believes that the stable repayment schedule might be established and the borrower will be able to pay the restructured loan in accordance with the new terms and conditions. Based on the cash flow, restructure has to be done based on the cash flow. The cash flow, set the loan installment within the customer's ability to pay back the loan. That's rescheduling. And other terms and conditions may be adjusted to support this rescheduling program. Secondly, there should be negotiations between the creditor and the borrower must take place in good faith, with the objectives of finding a constructive solution that workable and acceptable to both parties. Okay? Creditor and borrower must take place in good faith. Two, both the parties should have an idea that finding a construction solution to the problem and workable and acceptable for both parties. Rights shall be exercised and obligation fulfilled in good faith. Take into account the other party's valid interest, maintaining others' interest. Right and obligations has to be exercised, but to consider other parties' interest also. Now this is applicable to customer as well as to the bank. Right? The goal of the good faith principle is to facilitate loyalty, trust, and honesty between the creditor and the borrower in a loan restructuring process in order to ensure the rights of the parties are protected. Third, it is crucial to note that loan restructuring is possible only if the borrower and the creditor work together to achieve same goal for the benefit of all parties long term. Both the parties, bank as well as the defaulter, work together to achieve the same goal. That means to revive the business and continue the business. In any case, the creditor has the right to verify the accuracy of the data presented by the borrower and undertake the necessary legal steps in case the information provided by the borrower may lead to decisions that may damage the creditor. If the customer, right, use false information, mislead the bank has a right to take legal action against the customer. It has the right to verify the accuracy of the data. Bank has a right to verify the accuracy of the data presented by the borrower and undertake the necessary legal steps in case of information provided by the borrower may lead to decisions that may damage the creditor. Third principle is negotiation between the borrower and the creditor in the best interest of the parties. Best interest of the parties. It is in all parties' best interest the borrower contact the creditor as soon as possible when financial difficulties are identified, in order to start the discussion with respect to loan restructuring. It is in all parties' best interest the borrower contact the creditor as soon as possible when financial difficulties are identified, in order to start discussion with the respect of loan restructuring. To what extent, how many customers are coming forward like this? If the customer finding difficulties in the payment of this loan, when he think that the customer's financial crisis situation, difficult situation, come and ask for negotiate for restructuring, very rare, it has to be developed. That faith has to be developed. Although creditors typically send reminders to the borrowers in case of missing payment, The borrower is strongly advised to talk to the creditor before such an event occurs. In the past, we used to send reminders when the customer defaulted, immediately we send a reminder. Today, with the technology development, we can create messages through our system. Whenever customer funds are not sufficient to recover the facility, send a message immediately by SMS to the customer and follow up with the actual answer to follow up. So it will help the banks to uh, keep on track with the customer. Of course, we had most of the organized institutions now, they are sending advance notices. Such as your loan is due on such and such a days, and to kindly pay before this date. If you already paid, ignore this message. Right? Tailor-made messages are sent. Tailor-made messages are sent. So similarly, we can develop a system to send a message to the customer whenever defaulted by him. Loan installment not paid in due date. The borrower showing his responsibility and commitment to repayment could contact the creditor as soon as possible to discuss the payment difficulties. This is what the situation we have in relationship with the customer. Most of the customers, our customers, what we see that whenever they have difficulties, they try to avoid the banker, absconding the bankers, not answering the phones, changing the SIM. That type of negative attitudes develop with the defaulter. So our relationship should be there with the customer. Whenever he's having a difficult situation, problem, to negotiate and discuss with the banker. That's a very important to a third principle. Early discussions provide both the borrower and the creditor an opportunity to reach reasonable solution to avoid legal process or the collateral execution. Early discussion, whenever customer default, before the default or when the default started, if it comes to discussion, negotiate with the customer banker, come to conclusions, reasonable conclusions can be entered into. The borrower and creditor must discuss the causes of overdue payments, the borrower's financial position as well as any prospects for resuming payments. Example, the parties may consider the temporary or long-term nature of the causes of failure to make payments in timely manner, as well as capacity of the borrower to pay the arrears within reasonable time period. Everything has to be discussed. What is the overdue amount? How much of overdue interest? What are short-term and long-term nature of causes for the failure? Why it has happened? How it has happened? When it has happened? Who's responsible? This question in mind will help us to find a solution easily. Right? The solution within the customer's repayment ability and with the reasonable time frame. The fourth principle is clear communication. Each party shall communicate and provide information to the other regarding any relevant aspects. Communication by each party shall be clear, honest, fair, and reliable. So when the customer tries to abscond the bank, the communication breakdowns. The banks has tried to develop a clear communication channel with the customer. Upon the creditor's request, the bank's request, the borrower shall present the required documents to support the application for restructuring. Support the application for restructuring. Required documents have to be provided. If based on the collected information, The creditor believes that the provided information is false, the creditor has the right to terminate the negotiation by informing the borrower and writing and implementing the necessary legal steps. If the creditor, that the bank, finds that the information provided by the customer is wrong, misleading, misdirecting, then bank has a right to take legal action against the customer. In the meantime, both parties are free to discuss the restructuring terms and conditions, the repayment schedule, or any other condition of the agreement, which shall become effective upon the approval in writing by both parties. So meanwhile, both parties can discuss the terms and conditions. The fifth principle, the creditor shall provide the borrower with a clear statement of borrower's obligation based on the credit agreement. Once the discussions on the restructuring begin, the creditor shall provide the borrower with the detailed information in writing about the payment status of creditors, including at least the following information. Right? The creditor has to give the list of obligations to the borrower at the time of beginning the restructuring process. Total amount of the arrears, number of delayed dates for the oldest amount outstanding. What are the amount of arrears? How many installment in arrears? What is the oldest item outstanding? Outstanding balance of the loan, time remaining to fully repay the loan. What is the outstanding balance of the loan? And how many installment to be made in the future? Right? Detailed statement of all interest, including late payment interest and other penalties, and all amount of interest, including penalty interest, late fees, which accrue on a daily basis. When it comes to the negotiation table for a restructuring, all the information about the customer's account has to be provided. Outstanding balance, how many loan installments are delayed, how many days are delayed, what are the interest due, what is the penal interest charge, what are other commission and charge by the bank for defaulting the facility. All the information has to be provided before the restructuring negotiations. Sixth principle is the borrower shall provide the creditor with all necessary information in timely and accurate manner. That is the earlier principle 5 is for the banker. Banker has to provide relevant information. Principle 6 is the borrower shall provide the creditor with all the required information within the time frame established by the creditor. On the other hand, borrower, the defaulter, also has to provide the information required by the creditor accordingly within the time frame. Within the time frame, the information shall include but not be limited to the regular income and other financial sources, savings accounts, investments, current conditions of employment, individual income sources, employment prospects, etc. To ensure a proper assessment of borrower's financial situation, this information needed. Regular income, as for individual customers, right? Individual borrowers, regular income, and for other financial sources, savings accounts, investment, what are investment, how the return comes from the investments, current conditions of employment, with the confirmed, stabilized, right, for the position of the employment. Individual income sources, employment prospects, etc., to ensure proper assessment of borrower's financial situation. The borrower must inform the creditor about any other loan or financial obligation, any borrowings any other from the other bank. What is moratorium? Throughout the negotiation for restructuring, the creditor shall not initiate collateral execution procedure. Negotiations are going on. Bank should not take any action for recovery in the facility by liquidating of assets or filing legal action. When it has started this procedure, the creditor shall interrupt it. The borrower shall not take any action which may affect negatively the solvency of the relations of the creditor. Okay. Okay. Borrower shall not take any action which may affect negatively to the solvency or relation of the creditor. Right. Borrower again needs to default should not take any action to affect the solvency of the bank. The principle derives from the basic premises of the guidance that process is approved by the both parties of private contractual relationship, based on which the creditor is willing to assist the borrower for long-term benefits. That is moratorium. In this regard, if the creditor believes that it will benefit the borrower to restructure the loan, the creditor should provide the necessary conditions to the borrower to negotiate the restructuring plan, allowing short-term moratorium period on the legal or collateral execution procedures. What is moratorium? I think we had discussed this in last session. It is extending the repayment period for a shorter period. Extending the repayment for a shorter period. It's called moratorium. So moratorium should not create a problem for the defaulter to pay for payments. As I mentioned earlier, when the moratorium is granted for 6 months, for example, end of the 6 months, all the accumulated interest and the loan amounts should not be asked other customer to repay that entire amount. The purpose of moratorium is lost. Right? Depending on the situation's complexity, the moratorium shall not exceed 45 to 90 days from the date of written approval of the creditor on the initiation of restructuring negotiation. When the restructuring negotiation going on, loan installment can be delayed for 45 to 90 days, okay? Depending on the policy of the bank. The borrower should recognize that in exchange of granting the moratorium period, the borrower should promise not to undertake actions that might affect negatively its ability to restructure the loan and reaffirm the commitment to provide all the required information in an accurate and timely manner. Okay. Borrower should recognize that exchange of granting moratorium period, the borrower should promise that undertake action should not undertake any action affecting negatively to the restructuring program. The eighth one is the creditor shall provide prompt response to the borrower's proposal for loan restructuring. The creditor shall provide response to the borrower within time frame of 10 business days from the day of receiving the borrower's request in writing for a loan restructuring. During the negotiation period, those parties must be provide prompt response to each other in order to finalize the negotiation within the moratorium term. So the moratorium is to till the negotiations are going on to come to settlement of a recovery plan of restructuring. Loan installment recovery may be postponed. That's called moratorium. The creditor should allow the borrower a reasonable time, in general up to 21 days, providing the information and consider the formal loan restructuring process by the creditor. It's not a should be it is a formal procedure has to be applied whenever they have come to conclusion, come to agreement for a negotiation, providing information to negotiate. The parties are free to discuss the review of conditions. The borrower is willing to formally be engaged for the restructuring. If the restructuring conditions are clearly presented in writing, so that the borrower understands and assesses the implication of the proposal. Okay, right. The principle 9 says there should be given sufficient time to provide the information by the creditor, that is, the bank should give sufficient time to the borrower, defaulter, to give some information. Okay, gather information, give information. Normally, after 21 days, is given by the bankers. Restructure shall be reasonable and achievable. The loan restructuring proposal shall be based on the viable and reasonable prepayment schedule. In accordance with the restructuring method, agreed with the borrower and based on the applicable internal standard of the lending institutions. It should be the restructure shall be reasonable in achieving, and proposal should be viable restructuring proposal has to be prepared, developed by the both parties, and come to conclusion, implement that restructuring program. The 11th one is the creditor shall ensure that the confidentiality of the information received from the borrower and shall not disclose any details to information about the borrower's status to the third party unless agreed upon writing with the borrower, except for cases required by the laws in force. Right. Maintain the confidentiality, secrecy of the borrower customer. It's a duty of the banker. In any case, the bankers are liable for the maintaining of creditworthy, confidentiality. Maintain the confidentiality. According to section 76, 77, 78 of the Banking Act number 30 of 1988, maintaining confidentiality is a compulsory and also is a must maintained by the bankers. According to section 77, if any bank officer, any person banker, is violated the confidentiality of the customer, subject to liable of penalty of 3 million rupees and 1 year rigorous imprisonment. It's there in the Act itself. So therefore, it is the duty of the bank to maintain the secrecy of the customer and the details information about the customer. So what is successful turnaround usually includes the following elements. The firm is restructure. Third one is a turnaround. What is turnaround? Turnaround means into following if a firm is viable, there needs to be a good core business or you can't do turnaround. Turnaround means businesses are facing difficulties and it will be address the problems of the business and put back the business again as turnaround. Business can be turned around to viable operations. Management must be willing to and able to change. If it can't, it go on, new management might be the answer. So if the management is not agreeable to step down, answer is putting a new manager into the business. new management in the business. The industry has to be viable and the macroeconomic outlook should be favorable. To do business turnarounds, industry has to be viable and macroeconomic level has to be favorable. The firm has to be on sound financial footing. It's about right sizing the company to current economic environment and restoring soundness. Sound financial footing about the right sizing of the company to current economic environment with the business turnarounds. Based on the current revenue line, what can the firm do or restore stability? The company must restore product and services competitiveness. There needs to be product or service that customer want. What the consumer need wanted? That has to be produced by the company. Not what the company can manufacture. Now, for example, if we take our paper corporation, Voluntary Paper Corporation, they had to manufacture what the customer wanted. Product what the customer wanted. Not the product what they wanted. That's why it was failed. Right? To what the customer wanted, product has to be within the competition. What type of paper they need, that has to be produced by the. So then we can turn around the business of that Voluntary Paper Corporation. If you look at the past, Urala Sugar Company is one of the businesses which have been turned around successfully in Sri Lanka. Urala Sugar Corporation was failed and it was closing for a number of time, long period, and it has not turned around and manufactured sugar as well as other byproducts and manufacture 10% of our requirement by the Urala Sugar Corporation. It's a private and the government-private partnership business going on. So the turnaround was very successful. Likewise, large businesses need these turnarounds. Right? The firm needs to restore credibility with the customers and creditors. That's important. Turnaround is done well. What would be the favorable impact on the economy? Better business environment, lower cost of credit, better utilization of economic resources. Entrepreneurs will spend time on business, not avoiding bankers and lenders. Better usage of foreign exchange. The business turnaround is normally talking about the large corporates, specifically, not small ones, large corporates. Large corporates are doing the turnaround, better business environment, and low cost of credit. Because the minimum default NPA is increasing, banks, the cost of credit also increasing. Okay, better utilization of economic resources, very scarce resources. What is raising of securities? There's a problem with the business of the customer. Customer have a problem. Some consider that it's better to continue the failed business and recover. Some may consider that failed business, continue the business and try to recover going along with the business. Some want to kill the business to be killed. Some Shylocks they are in our industry. They want a pound of flesh, and they not consider about the continuity of the business, and they try to recover from their assets, and the business will be over from that collapsed. But not all are willing to pay for the attempt to recover the business. Do businesses continue for ever without fail? How many businesses that exist today are more than 200 years? 100 years, 50, 25 years old? We look at our environment, our Sri Lankan businesses. How many are conducted more than 200 years? Very few. You can feel for fingers of a hand. Renaissance is continuing doing business for 130 years. Jongaroli is 150 years. Manuel 60. Harishchandra 670. DS 40. DSI 45. Dinapala group is, I think, nearly about 85 years now. What is the success behind that? Right? So that's what we are looked into. According normal pattern of continuing business, the second generation business may collapse. It will not most of the businesses are not going beyond second generation. The third generation is collapse. We are fine for the reasons. Right? So what is the longest continued business in the world? It's a Guinness record. Continuously doing business for a longest period. Which is the business? It is Bamboo Restaurant in Japan. More than 2,000 years now, continuing. 42nd generation, continuing doing business. What's the success story behind it? That has to study carefully. So go through the website and search for it. Bamboo Restaurant. How they were continuing business. These are learning points for us. Okay. So any business have a life cycle, like a human being. Is a toddler, teenage, growing up, and come to maturity. And maturity, growing older and going up. This, if we put a graph, it will go like that, growing to maturity, stagnating, and end. Death. Like a human being, any industry, rise and fall of customer interest. Any industry have a life cycle. Okay. When it comes to this level, if we consider health, we take precaution action, but even that can go up to a maximum amount. Beyond that, you can't go. But a business can continue. Business can continue. Business have a time, this is over a period of time, the sales and the profit for this axis. This axis you get the time period. So the interaction period, there's a slight growth. And once you pick up the business, it will go up this way, and sales will increase from here to within this period, so growing period. When it comes to this level, then the growth has been not that fast, comes to maturity and start declining. And then started over a period declining, the business will collapse thereafter. So, what is the secret behind businesses continuing? When the business management identify that they have come to the peak level, they can't go any further from there onward. So they have to take a strategical change. A strategical change. It's called re-engineering process. It's called re-engineering process. So apply a re-engineering process. When I apply re-engineering process, the cycle will go up back. Product extension, expansion. Again go up. It will go up to some time, again it will come down like that. Likewise, whenever they see has come to the maturity level, the business has to strategically changes the business, either products or business pattern or system to meet the customer's need. It will improve. It will go up. So what we have to see is, when it comes to rehabilitation, defaulted facility, which level is the customer? Mostly the customer is here. At this stage, if you can't ask for facility on the customer, if you got a facility, definitely the facility will go back. Will go bad. So if the customer have a strategy to do a re-engineering process, you may be able to invest to that business to do a business turnaround. It's called business turnaround. Okay. What are issues in Sri Lanka? Stakeholders fail to identify the potential reasons for failure. They fail to differentiate between the acceptable but not non-controllable factors and unacceptable but controllable factors. There are certain factors acceptable but not controllable. So we had to develop strategies to manage the factors and unacceptable but controllable factors. Right? There are certain controllable factors, but comes unexpected time. For example, the coronavirus, COVID-19 virus, is unacceptable, but can be controllable. Factors can be controllable. Certain business has been diverted their business into certain method of use. For example, when the lockdown period came, so the home delivery system has been developed, delivering goods slow delivery, and the payment system has been automated. Most of the doing business from home. Companies started running from home. So those are the unacceptable situations where controllable factors can be developed. That type of businesses can success. Second one, businesses that can be recovered with potential benefits, all stakeholders are allowed to fail. Now, who are the stakeholders of the business? Are not only the particular owners, shareholders, the banks, the government, customers, consumers, creditors, debtors, suppliers, local authorities, society, employees, employee families. All these people are stakeholders of a business. When the business is larger, becoming very, very larger, the number of stakeholders also very large. If such a business collapsed, it's affecting an entire economy. It affects the entire economy. Okay. Now take, for example, case, the large corporate, KK cement plant. KK cement plant. It was producing cement for Sri Lanka's entire requirement some time back. Due to some reason, it has been closed down. It has have a very large impact on the economy. Right? Potential benefit. So whenever even if it is the story is different for the default, but when whatever default comes, it has effect. Affecting stakeholders. Third issue is process of liquidation itself would destroy and or take big share of the value. This reduces the value available to key stakeholders. What do you mean by that? You try to do recovery, right? Your legal cost, right? you file action regarding to recover the customer. Okay. Now you hire, mostly banks hire very what do you call, prominent, famous legal firms, legal companies to for file action, to go to courts and pay large amount of money. Who pays that? Bank is hiring consulting legal firms. They charge large sum of money, lakhs and lakhs, for millions sometimes. Will the bank pay the money? No, it is debited to the customer's account. So his loan value, recoverable amount is getting expanded. It will destroy the biggest share of the value, and value available to stakeholders are very less. So therefore, it's a big issue for a liquidation position. Third, stakeholders, the stakeholders do not agree in the recovery is further difficult. Think, should that business to be protected? Yes or no? If so, who would bear the cost of protecting the businesses? The stakeholders? Why should the stakeholder protect the business? Well, it sounds simple to answer. Do a CB, cost benefit analysis. If the benefits of the protecting the business exceed the cost, then protect it. Then the benefits are more than the cost, protect it. If the cost is high than the benefit, then don't go for any process. Leave it out. That's the principle behind that. Very simple principle. This is not a very large business. The cost benefit analysis, you also do. When you want to buy a ballpoint pen, buy a scribbling and see. You are paying for 10 rupees for the ballpoint pen. But still, you are scribbling and see whether it is writing perfectly. In other words, you are trying to match whether your 10 rupee is worth for this pen or not. Simple. So it can be applied for any organizations. Turnaround is done well. What would be the favorable impact on the economy? Better business environment. When the businesses are improving, the economy is improving. Right? NPA, when the NPA reducing, low cost of credit. Better utilization of economic resources. Better usage of our resources. We discussed earlier also this one. However, business turnaround encountered several special problems in Sri Lanka. Okay, so we'll have a small break and come back and continue. What are the problems facing Sri Lanka with regarding the business turnarounds, our experiences? Okay, shall we have a small break? However, business turnarounds encounter several special problems in Sri Lanka. What are these problems? First one is attitude of the banks. Banks in Sri Lanka generally think that restructuring is merely adding the accrued penal interest and divide it by 60. Sometimes when they are in a good mood, they even stretch the repayment period of balance loan by a couple of years. So what is restructuring? Most of the banks applies here, add the penal interest and divide by 60 or extend by period. So that's one of the issues presently, not understanding what is restructuring or rescheduling, what is turnaround. Then debtors' attitude. Debtors in default generally fear the banks and being under pressure. Often agree to arrangements that they cannot meet and problem continues. This is what happened. So you put terms and conditions, everything, and customer will just sign the documents, accepting it under pressure. nothing will happen, problem continues. Look at the time of granting the facility also, right? You are working out the customer, you have to pay so much of interest. You have to pay what is installment so much. Whether he can pay it or not, you have to pay this amount. When you go for recovery, you send a letter saying that customer, what do you say? On no before such and such a day, such and such amount, you deposit. Without looking customers' background of the problem of the position. That's so customer under pressure agrees for certain condition, but problem will not be solved. Third issue, managerial focus. Business sector does not understand that the turnaround requires a different managerial focus. They forget to concentrate on cash flow and accounting the financial sources to keep the necessary resources available and continue to think only of customers, products, and production. The banks are looking for the cash flow. They forgot to concentrate on the cash flow. Cash flow is the most important part. So the management has to be understood that to maintain the liquidity in the cash flow is a repayment source. No specialized turnaround attempt like undeveloped turnaround regimes. Troubled companies in Sri Lanka never had two teams at the top, one to run the business and one to negotiate the turnaround. So there are no specialized teams available in Sri Lanka. Thinking about this fund. There's no protection for new debt. Banks are sometimes quite rightly reluctant and wary about funding aging businesses because there are no protection for the subsequent debt capital over the previous debts. This is a problem. I told you earlier also, one is their problem is if you go on a new facility, right? Grant facility, banks are reluctant to grant facility because first one is defaulted. Our consent is always customers defaulted due to, right? Customers' fault, not the bank's fault. You have to consider that. New management at a risk. New infusion of management skill is almost impossible because new managers will also be held liable for all past sins of the ailing company, including any unpaid strategic dues. Hence, many managers are reluctant to take the risk. This is in the business environment you find. New management going to take over the business, you find difficulty and close down. Let's take example, Tulluriya. Tulluriya taken over by the number of companies that run for a period of time. But due to the large amount of liabilities, they could continue. For example, the Pakistani company took over manufacturing, but they were not successful. All things they were not successful. Continued. And there are the other two companies took over. Finally, Mass Holdings had taken over as a training center. It's a large business. Large, what you call the training center, swimming pool, quarters, large complex Tulluriya. Right? So therefore, we are finding difficulties finding a new management. It is very simple. You have to understand this position. Now you as a manager, take over a branch. Then you are held liable for all non-performing advances granted by your successors. And ultimately it's fallen on your shoulders to make recovery the loan, default facilities. If you are not recovered this loan defaulted facilities, your performance will be deteriorated, is affected. So most of the managers are not willing to take the risk. It happens everywhere. Even the business world or even our own environment, we find this risk. Then suspicious society, this is another fact. Society attitudes of business failure is almost there has been some misappropriation or fraud by the directors. This perception is difficult to shake off, and the bad name in the market is usually one of the biggest obstacles in engineering a complex business turnaround. This is the problem we are having. Society, all these things, if any business collapse, it's due to the fraud or misappropriation of directors. Maybe sometime, but it is not always. Now, one good example for us, take the golden key issue. The golden key issue, the bad name of, because the Collateralizing has misappropriated funds and directors have paid out, that bad name still continues. Even though they had the assets to pay back the depositors. They invested the business money in the mismanagement was short-term borrowings and investing in heavy long-term investments like Hyatt Hotel, this Trillium housing complex, like that, large businesses. Investments long-term. One question I can ask, before the default of this, the collapse of Golden Key Company, have you come across any person, any depositor who have been defaulted by paying the interest or the capital in due dates? Have you come across any case, the Golden Key, prior to this collapse? No. The collapse came overnight. It's overnight because central bank have found certain. Central bank published that there's a misappropriation, fraudulent transaction in Golden Key. When the central bank have published that one, following day, depositors ran to withdraw their funds. That's the collapse of Golden Key. Reasons behind we don't know. Certain reason. Then I heard that Collateralizing had an interview after this. It was released by the last government, and there was a TV advertisement. In the TV, there's a discussion went on. So what he was telling, if he had his assets taken over by the government, Hyatt Hotel, Selinco building, all these things, easily you could have paid the depositors. So what happened to the Golden Key name? The bad name. So they had to change the name. So you are one of the companies under your group. The bad name is cannot be shaken. So the Golden Key name, only one place is available. All other names have been changed. Then the Selinco group name has been changed. Right? CDB Development Finance. Centric Lanka, they changed the name. Only Golden Key is there for the hospital. The hospital. All other names have been changed. So that is the biggest obstacle here. Because the people or society is suspicious as a fraud. That cannot be changed. So changing the name may be possible sometime. So to improve our turnaround practices, what are the initiatives we should take in Sri Lanka? What are the things we can do? Change the attitude of the bank and other creditors to view business recovery as a specialized discipline and encourage banks to employ skilled workout specialists who can understand issues of turnaround and develop them into ability to work with other creditors. So this was actually established 1980s, late 90s, I remember, by prominent bankers get together, establish a company to to do this business recovery, right? So one of the recovery was this Urana Sugar Corporation. So senior bankers got together, develop, right? You can see that they can do it. But unfortunately, it's not continued because the support from the banks were not that positive. So we had to consider that business recovery is a specialized discipline. Educate, train, and develop specialized multidisciplinary business recovery professionals who could advise companies on strategies regarding revival, restructuring, and turnaround. Educate, train, and develop specialized multidisciplinary business recovery professionals. Who are they? It's talking about you. Multidisciplinary business recovery. That means different business have different environment. These are one of the principles you have to learn. When you are considering a proposal for a loan proposal for a customer business, you have to study about the business of the customer background. You learn about the customer, how they do the business before you grant the facility. So different customers have different strategies, methodologies. You have to learn those. Similarly, when it comes to recovery also, this is where we have to be multidisciplinary, not specialize in one area. Okay? Create awareness in the business community that the companies which became sick could be nursed back to health, and that it's not always true that the sickness had occurred because of cheating or fraud. It can be nursed. Business community that companies become sick can be nursed. Identify the problem and try to solve the problem. I always say that identify the problem, try to solve the problem, our problem automatically solved. Not always is cheating or fraud. Most of it is just mismanagement of financials. Financial management is the weakness. If bankers have control, I don't know, managing, control over these three areas I had just a little while ago I told you, then we may be able to go ahead with the customers. Have a new laws that addresses the special issues regarding business recovery and establish specialized courts manned by judges who have a clear understanding of turnaround issues and business recovery process. This will need to be done through carefully organized educating and training. What is the issues now? Don't we have any new laws? In 1990, there were 13 enactments passed in the parliament to strengthen the recovery of bank loans. Tribute to the late Dr. N.U. Javadana, who was the pioneer to bring all these new laws. Some of these are new laws brought into address to recover. Procedures have been developed. To what extent we are using those things. Debt Recovery Act number 2 of 1990. Recovery of Bank Loans Special Provision Act number 4 of 1990. Mortgage Amendment Act 1990. Trustees Ordinance Amendment Act 1990. There are a number of other Agrarian Service Act Amendment 1990. All these have been developed for recovery of the bank loans. To what extent we are using those things. Then 1990 to 2010, the commercial high courts were established. File action directly in the high courts. So this has been addressed by in Sri Lanka. But unfortunately, the certain judges are not understand about this banking terms and banking recovery process. Has to be that is the recovery. That the educating and training has to be there. Okay, create awareness in the business community that the lines defining recovery, restructuring, and liquidation are necessarily diffused and impress upon the community that there is a need for them to obtain a proper understanding of this concept in this day and age. What is recovery? What is restructuring? What is liquidating? That business community has to understand the difference between these three areas. And they have to educate it about this recovery, restructuring, and liquidation. Since there are many emerging issues in this rapidly developing subject, some international standards, norms, and regulations should be studied, proposed, and followed in Sri Lanka. Still, we are trying to redo the, to amend or the redo the Banking Act. Still, we are using the banking activities are still governed by the 1924. This is the 1894 London British Act. Our Bible is what? Banker's Bible. Yeah, still we are using that. Exchange, yeah. Bill of Exchange Ordinance. Bill of Exchange Ordinance prepared in 1894 in UK, British. And it brought to Sri Lanka 1925. Still we are the same. To what extent we are able to change it. The bank in England, Bank Act number Check Act bought in 1957. Still that is not applicable in Sri Lanka. Not applicable in Sri Lanka. So there are certain changes proposing to the Banking Act number 30 of 1988. Still not, could not be completed, still under pipeline. So the present changes, the environmental change, the required changes cannot be taken into consideration due to the legal structure not to develop up to them. Okay, the international standards and the rules that has to be brought back. Still, when a savings account holder brings a checks, the deposit to his account, still the banks, some of the banks refusing to accept it. Still following the Bill of Exchange Ordinance. Yes, Section 82 says you can do it. But you can't, but the protection is not given. So there are certain issues. Still we have issues. The regulations has to be changed. But central bank is, I think, looking at certain changes to be implemented. They are doing certain changes. And it has been established. Let us finally remember that good entrepreneurs are few and are assets to the nation. Who is an entrepreneur? What's the difference between entrepreneur and a businessman? What's the difference between entrepreneur and a businessman? Businessmen are just, without any higher risk, buying and selling. Buy at a rate, sell. Entrepreneurs are taking the risk, convert the risk into business, and earning profit by turning the risk into business. Those are entrepreneurs. So those entrepreneurs are very few. Right? So they have to be, they are assets to the nation, to the country. It is the interest of the society to nurture them health if they fall sick. This is the interest of the society to nurture them, put them to fall sick, recover them. Let's develop good hospitals, efficient preventive and curative healthcare systems, and clever doctors in order to do so. This is what we expected from you. Good hospitals, your banks. Efficient and preventive curative healthcare systems, right? Develop new recovery system, innovate new techniques, and clever doctors talking about you. Okay. What is the role of the bank in this business turnarounds? At the commencement of the business relationship, ensure that the business is properly studied. Business environment, business background is properly studied. Look at the cost structure, industry norms, and the acceptable levels. Profit and loss account, see the cost structure. Compare with the industry norms. Compare with the previous ones. The acceptable, be it acceptable. Carry out proper due diligence, proper audit. Avoid over-financing or under-financing. This is very, very, very important. Most of our bankers are granting facilities, whatever customer comes and asks. Customers ඉල්ලන කාල දෙනවා මිසක් අවශ්‍ය කාල දෙන්නේ නැහැ. ඉල්ලන කාල දෙනවා මිසක් අවශ්‍ය කාල දෙන්නේ නැහැ. You are not identifying the customer need and finance. Need-based finance is very important. So you can avoid over-financing or under-financing. Over-financing, under-financing, both are dangerous. Right? Over-financing, customer may misuse the funds and default the facility. Under-financing, customer may not be able to run the business and business will collapse. Both are dangerous. So it's the role of the bank to see the need-based finance important. If the exposure is too large, go for a syndication. Customer requirement is large, better go for a syndication. Get other banks who involved in the facility. This is okay, acceptable, viable. If there are several banks involved, look at the possibility of sharing the security on the equitable proportionate manner. If not, different banks will act different direction in the event of a crisis. Right? So there's a product for that. Right? We'll go for a security for concurrent mortgage. Then we have a proportionate manner right. It's there. Work out the working capital requirement based on the properly studied operating cycle. It's very, very, very important. Work out the working capital cycle based on that. Identify the customer's financial need for working capital. This is a crucial part. අලියගත්තට හෙන්ඩුව ගන්න සල්ලි දෙන්නේ නැහැ අපි. කාර් එක ගත්තට පෙට්‍රල් ගන්න සල්ලි නැහැ. So spending on fixed capital will not generate any business. It is the working capital. So the managing working capital is the lifeblood of any business. Leave room for upward revision for facilities of financing growth of a business. Now, whenever these are the important factors, whenever you entertain a customer's facility, right, look at the requirement and try to at least 20 to 25% more, right, for future expansion and prepare your limit and get the collateral, document everything for that amount. But don't release the funds. Whenever a customer required in the future, you can release those funds. Then you are avoiding the time of processing back that facility for the customer. Again, putting board papers. Again, papers for approval. No need. Only once you have to put it. So develop ourselves, leave room for upward division, 20-25% more in a facility, get documents prepared, or that will be help us. So, any customer needed for expansion, not the facility. Make provision for compulsory equity build-up by the way of cash retentions and dividend restrictions. When it comes to rehabilitation of facilities, restructuring, and business turnarounds, always try to do the restrictions on the cash payment, that is dividend payment, dividend restrictions, and try to do a equity build-up, that is build-up savings, right? Compulsory, and it will be compensate any crisis situation. Structure the facilities taking into account the seasonal fluctuations of the business. This is again need-based finance. Structure the facilities taking into account the seasonal fluctuation of the business. Whenever customer business is peak seasonal time, you should be able to give their necessary funds. And off-season, avoid giving any facilities, by which you may be able to control yourself easy. Be ready to be a part of the business. Bankers are partners of the business. Where do you stay in the balance sheet of the customer? Where do bankers stay in the balance sheet of the customer? Next to the equity. So we are partners of the business. We have a short, we have an interest to the period of the loan. The customer has the interest for lifetime. The different. Right. While continuing the business, the role of the bank, while continuing the business relationship, all we discuss when starting a business. Visit, and visit. Visits are the best way to understand the business as it goes. Site visits, inspections are very important. Right? What to do, you got this visit the customer's business premises and try to understand the business as it is. It's important. Document vital information for future reference. These are the other weak area. Whenever you go for a visit or an inspection, site visit, document, prepare a report about vital information. Right? And keep that information in a proper filing manner. You need that document for next time when you go visit to the customer premises, you take that document, see whatever you found the previous time, whether it's continuing, whether it had to be rectified, any changes into that, verify that. It will helpful the successor to continue with this customers about the customer background information. Very good source of documents. Most of them we have seen, we are going for inspection, just look at the place and come back. That's all. No document has been prepared or recorded the documents. Keep the hierarchy informed of the development, particularly the early warning signals. Do not hide elephants. Whenever you go for a site visit, inspection, they found any warning signal about the production, about the behavior of the employees, right? About performance, stock levels, supply chain, any warning signal, immediately brought that into the consent of the management. That's very important. Do not hide elephants. Call for and go through financial statement regularly, particularly the management accounts. Quarterly financials are very important. Management accounts are detailed accounts. What we get annually is the published accounts, but we need the management accounts. Ask for the customer for management accounts. At least one quarterly. There are still good source of information despite potential manipulation due to obvious reasons. The only source available for accountation is what is customs prepared. So whenever you go for inspection, site visit to a business premises, try to verify the information, the financial statement, physically, whether the information to justify the information. For example, if a sales figures are given so much, so just when you visit to see how much of sales taking place in the business for a particular day, and have an idea about that. Okay. Keep an eye on the development of the industry concerned. Anticipate changes in the facility requirements. When the industry is changing, for example, new machinery has introduced in the industry, new concept and new products has been developed. So anticipate those changes and ask the customer to change accordingly. Otherwise, his product will be obsolete in the market. Be quick to accommodate requests related to temporary cash flow issues. Not solving such problem can lead to permanent losses that will in turn create permanent problems. Whenever you see a customer coming and asking for TOD, work out and see why he is asking for the TOD. TOD is not a product to solve cash flow problems. Most of the bankers consider TOD as a working capital finance. No, it is not a working capital finance. TOD should be used as a bridging finance where the customer's income and the short to cover the temporary. Therefore, whenever a customer comes and asks for a TOD, find for the reason for and try to solve the problem. I give a small case to understand why. The customer comes to your bank and asking for a TOD, giving a check, asking for a TOD. So you ask from the customer, whether I TOD according? Are you on a TOD? That's why we does business has out to business harima dull. Checks for get given a TOD. So what is your position? What do you think? Customer said this problem. There are certain checks are coming. These days business is dull. Business halme. Aisa ODF learning. Now he want to bridge the gap between his sales and the bills payable, checks payable or bills payable. Right? Right. You grant the facility, you take a loan. But you never ask a question. You never ask a question. Business dull na business decline will be කොහොමද මේක ගෙවන්නේ? How do you pay this? What is the repayment source? The basic fundamental in lending, repayment source. ඒක අහන්න. එතන තමයි වැරද්ද. So find out the reason. Why he's asking and try to solve the problem with that. Alternative solutions are there. Alternative products are there. TOD is not the only product. It is a high risk product. Okay. Ensure that the business always runs at the desired capacity level before the break-even level without disruption to the production flow and without loss of capacity. If you visit to the factories, manufacturing organizations, and whether they are operating the desired capacity. Machine capacities at the time of granting a facility, we consider that the machine capacity to be utilized 75% or 80%. If it's operated more than that, okay, don't worry, because customer having more profits. But if it's less than that, for example, 75% we assume production capacity, but only manufacture 60%, then cost will overrun and profit will decline. You understand that. So see that in the business, it's run out the capacity. If the client does not have proper controls and planning, the bank will insist on introducing them. When the failure, faced with the failure, try to understand the problem as clearly as possible. This is on the very first day I started. Understand the customer's problem, solve the customer's problem. It is solve almost all our problems. Avoid generalization and giving reasons such as cash flow problems, liquidity problems, working capital issues, financial problems, etc. These are outcomes. The issues are beneath of symptoms. Okay? So understand the problem. These are not problems. These are symptoms of the problem. Problem is beneath. Take into consideration that. Customer is having a check return. What is that? It's a why check is returned? Because he didn't have sufficient cash to deposit to meet the check. Okay. So why the reason for funds not available? The easy reason is check is bounced due to reason funds are not available. That is not the cause. Cause is somewhere else. Why the funds are not available? If the check is given to purchase merchandise, inventory, right? Checks is given to the inventory, purchase inventory. Then what happened to the inventory? That inventory, if you are sold, there's the money. The problem is that problem is there. Sometimes funds have been misused or used for some other purpose. When the check is coming, funds are not available. So understand the problem correctly. If the issues are temporary and easy to resolve, rescheduling of facilities will do. Right? It will help. If the issues are bigger and the nature of business are failure, then the more comprehensive approach is required. That is, restructuring and other things are required. Consider appropriation of product restructuring, kill bad products, innovate products, and readjust the portfolio. The customers. Product restructuring. What product is giving more profits? Which product is using less raw materials? Right? Which product is more popular in demand? Likewise, analyze, restructure the product. Restructuring, making and buying arrangements. Marketing and buyer arrangements. That by promotion activities, low-cost promotion activities, we can restructure the marketing and marketing strategies. Process re-engineering and productivity improvement. Another important part. If the business is come to stagnating level or the maturity level, the re-engineering process has to be, the product improvement has to be carried out to continue the business. is, if not business, they will collapse. More spending on research and development and on product development. Management restructuring insists on increasing management inputs. It found to be lacking. Management quality has to be looked into and carefully. In the case of governance issues, believe that the best of corporate governance is not always the case. Do not get too excited. Governance means managing the business. The responsibilities and the accountability of the directors. It's called governance. Strengthen the monitoring process. Very, very important. Declare your concern and take it up directly with the client. Right? Formalize any procedures required to ensure better corporate governance. Probably still better to recover the business, so go for it. That's what we need. Number of reasons may result in a company failures. A bank or a financial institution should ideally work to avoid such failures while commencing and continuing business relationship, and also when facing the failure. A bank or a financial institution should ideally work towards avoidance of failures. The remedial management avoidance of failures, which while commencing business, continuing business, and business is failed. All three instances. It is much easier to kill a business to recover money from the break-up value of assets, but almost all the stakeholders are about to lose. Therefore, win-win approach of restructuring firm is beneficial to all parties. A banker's approach to managing a business relation play a vital role. We discussed 4 different approaches. While restructuring is a far better solution, all parties, it is riskier in a way because the banks may have to infuse more funding. The owners must cooperate by giving additional commitment in such instances so as to have balanced solution. We are taking a risk by funding more and more in the restructuring. So whenever you fund more, you should have control over the customer's business. Balanced solution. Okay, that's all about restructuring and rescheduling. So thank you for not asking any questions. Any questions? Okay, we'll go to the next session. Okay. I think this we have discussed, I think. Compromise settlement, its option available is compromise settlement or called amicable settlement. Right? When the business fails, and if the market, the four what do you call parameters, if the market is completely paralyzed, failed, but the customer is willing to come forward for negotiation and collateral or assets are available, the next best option is go for a compromise settlement or an amicable settlement. Let's see what is the amicable settlement. So debt recovery management is not going for taking the entire, or shaking the customer's pocket and take everything, pressing the customer for whatever available. It is Shylock's focus. So it is the duty of the bank or any financial institution. Recovery management is a professional way of doing things. Right. Steps to control root cause for NPA in banks. There are 3 approaches you can follow to stop NPAs in the banks. First step is the following a conservative approach. Second is loan restructuring is the secondary. Third step would be adopting innovative means of tracking NPA. What is conservative approach? Banks need to be more cautious while lending those sectors that deems huge capital and is prone for becoming delinquent. Be more cautious when giving large amounts, which demands huge capital and prone to be becoming delinquent, high risk. They need to follow a conservative approach for loan disbursement, particularly in case where the repayment tenor is stretched over a long period of time. Large amounts, long period facilities needed very close conservative approach. Right? Second one, restructuring. Secondly, financial institutions must take necessary actions right from the time a loan request is raised from a borrowers. This is action right from the time of the loan request is well. This means they must identify all possible modes of repayment and issue installments and equated monthly installments are paid in time. They must not wait for the time until loans become delinquent and have to be restructured at the end of the right? So prevention is better than cure. Take precaution actions where we can avoid getting the NPE. Third option, the steps to avoid NPAs is adopting innovative means of tracking NPA. Bearing in mind the ever-growing and unstoppable rise in PA, these high-time banks and financial institutions adopt innovative ways to treat them. You have to find out innovative ways, not traditional ways, new ways. There is an immediate need to use advanced tools where banks can have detailed insight on customer behavior and their repaying capacity to make effective lending decisions. It's very important. Use advanced tools where banks can have detailed insight on customer behavior and repaying capacity to make lending decisions. Decisions has to be based on proper analysis and appraisal. They must also find aids to contact borrowers for recovering loan installment in case of the failures and take legal action whenever required. Right? How to keep the customers in contact in the case of failure specifically, have a closer relationship. Sorry. Try to recover facilities installment. Whenever customer facing difficulties, we observe monitoring process. We discuss early warning symptoms. When you come across any warning symptoms, we move closer to the customer and try to find out the reasons of that warning symptoms and try to avoid the system and get a precautionary action. Non-performing assets are a great threat to not only banks, but the country's economy on a whole. Banks non-performing is a threat to the entire country. If a bank collapse due to non-performing increases into NPA, if a bank collapse, the entire financial system will collapse in the country. So it will have a big impact on the country's economy. Right? when the golden key issue came at that time, uh, all the companies under the group have had a big threat of surviving. I can still remember, some customers try to close their accounts, specifically time deposit accounts for Ceylon Bank and those financial companies came under selling group because they didn't have trust on private sector at that time. So it has been spread to all other private sector banks. Customers try to withdraw from other banks also. So it has been central bank interveners managed to control it. Otherwise, the entire economy would have been collapsed. The nation's progress depends highly on the macroeconomic stability, which can only be attained when the NPA in the banks remain under control. Macroeconomic stability can be attained only if the banks are keeping NPA in their under control. Now, of course, you can see the NPAs are increasing rapidly in our entire environment. So it has a big impact on our macroeconomic stability of the financial stability of the country. Not much should be expected only from the government to come to the rescue of banks. The government is not responsible for collapse of a government. The banks. In the last recession time, 2008 recession time, most of the banks in states collapsed. One of the bank, Northwestern Bank, was a collapse. Number of banks were collapsed. So the President Bin Laden put a paper to the Senate asking for $600 million to pump to the banks to stabilize the banks to face without collapsing, stabilize the bank in the recession time. But Senate refused that. The Senate didn't pass that bill. $600 million not given. And what Senate told was, these are private banks, owned by private. So let them find a way to recover their funds. Public funds are not liable for fall of private banks. This is the Senate of the State of America mentioned to President Barack Obama at the time of 2000 recession time. So learn a lesson. We cannot depend on central bank in the time of a collapse. Yeah, also have to survive. Instead, they must themselves be empowered by taking corrective steps, placing effective recovery policies on time and way before they buckle. Recovery policies are very important. Very, very important. My first session, I have pointed out the present position of the country, banking system, regarding to the capital requirement of the central banks order by 2023, what will happen? So still there's a threat. Okay. So next option, what we're going to talk about is compromise settlement. What is compromise settlement? It refers to a negotiated settlement where a borrower offers to pay and the bank agrees to accept in full and final settlement of dues an amount less than the total amount due to the bank under the relevant loan contract. It's called compromise settlement. Where the banks agree to accept an amount as a full and final settlement, which is less than the outstanding amount or overdue amount, and negotiate. Also, sometimes that final settlement may be by certain assets or property offered by the company to the banks. It's also possible. Right? Compromise settlement. This settlement invariably involves a certain sacrifice by the bank by way of write-off and or waiver of portion of their dues on a one-time basis. Now, therefore, it's called, sometimes called as one-time settlement. The settlement invariably involves certain sacrifice by the bank by way of write-off and or waive of portion of its dues on a one-time basis. The policy recognizes that it is not possible to lay down precise guidelines which can be followed uniformly in case of all compromise offers, as each offer is unique in the context of circumstances necessitating its consideration as recovery option. So there can there won't be any guideline, proper guideline, precise guideline to say this is how we have to do the compromise settlement. So each and every bank has given option to look at case by case and decide to offer compromise settlement. Right. I'll give a case to understand about this compromise settlement. It's happened long time before. Prior to 1972, before you were born, 1972, almost all the estates were managed by British companies. And before 1972, all these estates were managed or owned by the British companies and managed by the British companies, like John Keel's, Somerville, George Stewart's, Walker's Angry, Brown's. There are a number of British companies were there. They were the who were managing these companies, managing these estates. In 1972, Mrs. Sirima Bandaranaike government got an act called Land Reformation Act. Under the Land Reformation Act, the land ownership has been restricted for 50 acres at that time. Nobody can have land more than 50 acres. So any land excess of more than 50 acres were taken over by the government. Government took nationalized. All the state, part of the estates were nationalized and established Janata Estate Development Board, Janavasama, and Usavasa, Udratavatsa Mardana Mandali, and under their control. Right? Now, these companies which were doing this estate management businesses, the entire business was collapsed. Their businesses were collapsed. So banks lent to these businesses were unable to recover their facilities which are gone to the companies, the British companies. What happened? Right? There are some large number of amount are borrowed from the banks and the state agencies, and they were not able to pay back. Now, some companies try to do business turnarounds, okay? Divert the business some other operations and try to involve with the businesses. Okay, I'll take one case, only one case, because the time factor is here, to understand this. Workers. So the workers has estates in the island wide, large estate, estate and other things, and they were the suppliers of estate materials required for fertilizer and other estate equipments they supply. And also workers have some other businesses. Their diverted businesses were there. Right? So what workers did after this, their estates were taken over the government, they divert their business to import. They were the agents for importing British vehicles, Morris and Austin vehicles. Morris and Austin vehicle, commercial vehicles as well as cars. They were the agent. So they were importing this from in UK, Morris and Austin vehicles, and were doing business. In 1977, Mr. J.R. Javadar took over the government and introduced what do you call free trade or the free economy. Open economy policies were established. Economy was opened up. Result of open up the economy, the Japanese used vehicle came into the country in 1997. 1977 and 1978, I think. So the inflow, large amount of used vehicles came into the country. And what happened to the workers? Their vehicles could not sell. The cheap Japanese vehicle came into market and their business was collapsed. Workers' business was collapsed. And also workers was doing another business called marine engineering. They had a large 15-acre land in Cotahuena next to Ceylon Tobacco Company. Till last government came, it was there. In 2000, yeah. The property, which is their factory or the to do the ship repairing, right? So they had a dock, what they call a marine engineering unit, engineering part, repairing ships. Then later on, Colombo Dockyard was established by the Port Authority and the government and took over the marine engineering business repairs by the Colombo Dockyard Limited. So the business of that also workers collapsed. Then all the businesses, they collapsed. They had large number of properties island-wide. They tried to sell one by one to recover to prepay their loans and to repay their liabilities. First, they sold their, what do you call, bungalows. Directors' bungalows was at Guildford Crescent. About 8 bungalows were there. First, they sold that. Then the vehicles, fleet of vehicles they had, they sold that. They started selling their assets in the countryside. So one of the properties, you know, that in Colpity Garage is 2-acre land, which was taken to the bank, which is offered to the Bank of Ceylon, and part of that, half of that, bought by the Bank of Ceylon and put up Bank of Ceylon Merchant Tower. Likewise, similarly, the Browns, when the estates were taken over by the government, whatever inside the estate were taken over by the government, whatever outside the estate were left alone. So therefore, there are a lot of estate bungalows were there outside the estates, belongs to the Browns. So BOC at that time, Dr. Nisaka Vijayawardhan was the chairman, negotiated and bought for the market value about number of these bungalows. Some of these are Spring Valley Badulla, Duff House at Lower Elia, then Upper Glen, Lower Glen at Lindul, Hatton, then Lindula, then Lindula at Bandara, likewise. About 6 or 7 estate bungalows were taken over by the Bank of Ceylon and converted these bungalows into holiday bungalows for the staff. welfare of the staff, bought by the and try to settle. And also they have bought two major properties in Colombo, that Ibangola Junction, the large garage which was there on the Ibangola Junction, which was owned by the Browns at that time, which was bought. And there's another property next to HNB, our side, that was bought by the Bank of Ceylon. And BOC want to put up a 23-story building in the garage premises in 1983 at 1980s. Unfortunately, 1983 riots came, then the entire economy and all everything collapsed, and the idea was left alone. So what happened? All this, they take over to the market value. Bank of Ceylon bought from the workers' premises, as well as Browns their premises, at market price, market value, and relieve them from the liabilities. Part of the liabilities they are relieved. So this is called compromise settlement, offering a valuable asset of the customer and try to settle, to come to settlement. Right? So the Ibangala premises was subsequently, it was there for a long time without using. In the Apico, they have bought that. Now they have put up the supermarket complex there, Apico, in that premises. Well, it was bought by the Bank of Ceylon. Anyway, so this is the principle behind doing for what you call compromise settlements. Right? This is also called as some books is called as one-time compromises. Okay. Time compromise is an important aspect of settlement of proposals. It's a concept of opportunity cost of fund. Right? The time of compromise is called concept of opportunity cost of funds. If you buy today without buying after 5 years, what will the benefit? Opportunity cost of funds. What will the benefit? Work out on that basis only. This time compromises has been applied in this compromise settlements. Time compromise is applied technique when you come to compromise settlement. The opportunity cost of fund in hand, vice versa, that of funds which could come in the hand at a later period. Opportunity cost of fund in hand, today, what the value of the asset today, fund which could come in hand at a later period, should be calculated to establish a comparative advantage of now or later. Comparative advantage. So normally we applied here the net present value system technique we used and work out. See, if a customer is offering some money, some amount to settle in full settlement of a asset, bank will have to consider, the bank and finance institution have to consider, if you file action after 5 years, how much you are getting? Or spending all the money on the legal fees and other things, everything, spending the time value of money, and it is advantage, go for a settlement now or go for a legal action and recover later. That's called concept of time compromise. Concept of time compromise. Assessing compromise proposals based on net present value will give the pragmatic dimension to the approach on recovery of NPAs, especially in suit failed accounts. Without filing action in the courts, whether customer is offering some lesser amount than the payable amount, whether lender can accept it and go for a settlement. It's called compromise settlement. Considering the matter in all its amplitude ranging from absolute need to reduce NPAs. It will reduce the NPA position. Indian Banks Association (IBA) with a letter in 2007 informed that Reserve Bank of India advised the bank that they may enter into compromise settlement with willful defaulters, fraudulent borrowers, without prejudice to the criminal case against the borrower, and that such cases of compromise settlement should be vetted by management committee board of the respective banks. India, Indian scenario, this is willful defaulters who have able to pay, but they are not paying. And also fraudulent borrowers. Borrowers who had with a fraudulent transaction, showed fraudulent documents, and borrowed, they are for a settlement to come for a compromise settlement with them. Right? Borrow without prejudice to the criminal case against the borrower. If needed, they can file action, criminal cases subsequently for defaulting. Right? Okay. So what is loan compromise is again discussed. Once NPA unit is evaluated and found that it cannot be revived, it becomes incumbent on the branch to initiate recovery proceedings. Cannot be revived. NPA leave that. Become incumbent on the branch to initiate recovery proceedings. Since money has got time value, when the recovery means the branch adopts should result in a quick repayment. Time value of money, today's value is greater than tomorrow's value. අද ගෑස් සිලින්ඩරයක් ගත්තොත් 2450යි හෙට ගන්න තියාගත්තොත් 5200යි. That's called time value of money. Right? So if you buy today is a gas cylinder, your time value of money is 5,200 rupees. That's a simple principle about this. As a recovery means, the bank can either go to a court praying for a decree or negotiate with the customer for compromise settlement. Even after filing an action, also we can ask for the courts go for a decree, that's for judgment, or either negotiate for a customer for a compromise settlement. It can be negotiated in advance, or even after filing action also you can go for a compromise settlement. It's coming as a court settlement. Okay. In general, it is experienced that filing suits and recovery of dues of banks through the process of courts is cumbersome, expensive, and time-consuming. Therefore, without going to courts, if you can recover by a lesser amount, then you apply that principle. A compromise in bank loans means agreeing to borrower's request of accepting a part of outstanding dues in the books of the bank as a full and final payment, or allowing for the non-compliance of the terms of the loan after analyzing the alternative course of action, genuineness, capacity of the borrower to repay. Right? If a customer is suffering a settlement process, genuineness, whether he cannot pay anything more than that, we may agree for that. Right? This is also called a voluntary debt reduction or scaling down of dues. Right? Voluntary debt reduction or scaling down is some books for that or compromise settlement. Loan compromise helps the bank to recover dues with least passage of time and minimize the loss of earning opportunities. So whatever recovered today, you can invest for loans against and earn profits. The earning opportunities will be increased. So sometimes the loss incurred due to the compromise settlement can be recovered to reinvest in that money today. So consider that not as a loss. Sometimes loss may be minimal. Okay. One-time settlement OTS is a type of compromise settlement executed by the banks in order to recover non-performing assets. OTS is a scheme where the borrower, the one who have defaulted, proposes to settle all the dues at once. And the banks agree to accept an amount lesser than what was originally due. Okay, so same thing, it's a compromise settlement. One time, that means completely settles everything, close the account, close the books. There won't be any claim thereafter. One-time settlement is usual than when the borrower cannot repay the loan and the interest accrued becomes more than the principal amount. This principle sometimes applies. Okay, so what are strategies available for recovery in PA? The preventive strategies are there. Resolution strategies are there. Preventive strategies are screening, surveillance, loan review, macro level or micro level. Resolution strategies are legal or non-legal. Non-legal are loan workouts, amicable settlements, compromise settlements, and other systems. Okay, right. That's all about things. Deposit makes the bank impossible. Lending makes the bank profitable. NPA makes bank perishable. So I started the recovery management with this slide. Anyway, so we discussed two strategies available for recovery going along with the customer. Okay, so but next week I think we don't have any classes. It's 1st of May. So 8th of May we'll have the other class. We'll discuss the exit strategies. Okay, any questions?